welcome to Business Line. The European Central Bank will do whatever it takes to preserve the euro. This is what Mario Draghi said back in 2012 at the height of the Eurozone crisis. Weeks after, he revealed the plan aimed at saving the monetary union, and only now the EU Court of Justice has ruled Draghi's program did not reach beyond the central bank's authority.
A European Central Bank bond buying plan crafted at the height of the Eurozone crisis is in line with European law, according to the European Court of Justice. The judgment is a milestone in a long-running row about printing money and the limits of central bank powers between the ECB and skeptics in Germany. The verdict represents a massive victory for the ECB. The European Union's top court was responding to a legal action by a 35,000-strong group of skeptics from Germany, including politicians and academics, who had sought to dismantle the bond-buying scheme created in 2012 but never used.
The situation in the Eurozone and the EU in general is way better than 3 years ago. The region's economists and politicians are extremely cautious speaking about any kind of growth, saying it's rather a recovery. The latest example, new car sales in Europe. Even though they were growing at a slower pace, they did grow.
Fiat, Chrysler, Renault and Nissan led European car sales last month, but the overall pace of the market's recovery slowed down. Renault's sales were lifted largely thanks to its recent models of the Clio and Captur, while Nissan's Qashqai boosted their profits. According to the Association of European Car Makers, registrations rose 1.4% year-on-year to 1.15 million cars last month, well short of the market's 8.1% expansion in January to April.
With Europe trying to speed up its economic recovery, it's been a while since investors have been looking for something different, and they finally got good news. Saudi Arabia has just opened its stock market to the world.
Saudi Arabia has opened its stock market up to foreigners for the first time. It's part of long-awaited economic reforms in the world's largest oil exporter. Foreigners are at present believed to own no more than 5% of the Saudi market. Foreign investors own about 15% of other much smaller stock markets in the Gulf, such as Dubai. If foreigners raise their ownership of Saudi market to that level, it could mean an inflow of some 40 billion euros into the country.
The Middle East's biggest stock market and the world's largest oil exporter, Saudi Arabia, is the last of the grouping of the world's largest economies, the G20, to open up to the foreigners. Considering the country's status, no surprise the world's investors got so excited. But Saudi Arabia has cooled them down, revealing the rules for those who want to step on its financial soil. No retail investors, only institutions that manage $5 billion of assets will be given the green light. If the regulators make an exception, $3 billion could be enough. Let's say you pass this rule. In this case, as a single investor, you cannot own more than 5% of a company. Overall, foreign ownership of that firm can't top 49%. Moreover, only 10% of equity in the stock exchange can be foreign-owned. With all these complications, the question is it worth it? Well, look at this. Saudi Arabia's market value is over $560 billion and daily trading volumes are about $2.4 billion. Saudi Stock Exchange, or Tadawul, lists more than 165 publicly traded companies. The index's biggest sector is real estate, followed by petrochemicals and banks and financial services. All this in a strong economy built up on high oil profits. And that's exactly what the kingdom is trying to change, its dependence on oil, especially after crude prices tumbled. Even though oil got much cheaper, Europe's airlines don't feel relieved. Air France is one of them. For a while, the carrier has been trying to cut its costs, and now it's going to step further and declared war.
Air France is launching legal action against its own pilots after failing to make a breakthrough in restructuring talks to halt its falling revenues. It comes a day after the airline announced cuts of some 80 million euros and the closure of several loss-making lines. But union leaders have described the move as irresponsible. This is unprecedented. On top of it, it was announced through the press with words that are journalistic indeed, but amount to a declaration of war against pilots. So we're deeply appalled by this announcement. Air France, like other traditional carriers, faces severe competition from low-cost rivals on regional routes and from state-backed airlines such as Emirates for long-haul passengers. Last year, a strike over its existing productivity drive cost the company some €500 million.
From one war to another, Microsoft and Sony for years have been competing for the gamers, as while we play, they earn. Who scored recently? This is it. This is IT.
This week, gamers from all around the world gathered at the Los Angeles Convention Center for the Electronic Entertainment Expo. As always, all eyes were on rivals Microsoft and Sony. Let's start with the US giant. A year and a half after the release of Xbox One, Redmond has finally announced backwards compatibility. It means users will be able to play older Xbox 360 games on the current console. The company also showed a version of Minecraft made specifically for their new augmented reality headset HoloLens. What about games? At Microsoft, they know you should never change a winning formula. Among the most notable titles were historic heavyweights such as Tomb Raider. It's hard to believe that since their inception in 1996, the adventures of Lara Croft have collectively sold over 50 million units. Sony too appealed to the hearts of older players. Among a myriad of new titles, the Japanese company announced something that I have been waiting for 16 years. It's the PlayStation 4 remake of Final Fantasy VII, one of the most popular RPGs of all time, originally published in 1997. Now, will that be enough to consolidate Sony's dominance in the console's race, with 22.3 million units sold against Microsoft's estimated 12 million? Well, that's for the fans to decide. That was it. That was IT.
Losing out to your competitors may result not only lower revenues, sometimes it means the end. This is what happened to one of the US most famous brands, Colt Defense, one of America's best-known makers of guns.
The legendary US gun maker Colt is filing for bankruptcy. The Connecticut-based firm, which has been making weapons for 160 years, has been struggling for months because of poor sales, as well as a heavy debt load of around €260 million. Last month, Colt, whose M1911 was the primary sidearm for the US military, missed a €10 million payment to holders in its senior bonds. However, the firm says it intends to continue with its normal business operations during restructuring.
This is it for now. Thank you for watching, and we'll see you next week.